journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I want to apologize for not getting a video out last night at 6 o'clock last night, Tucson time. Google shut me down, and I wasn't able to receive or get email for sending stuff out. So I apologize. I'll go through what we were looking at. This was the only position that we officially had on here, which was the soybean meal. It's acting pretty nicely. If you're in that, keep your stop working here because it has a chance of making a pretty nice move here. And if it does, that means that you get up to this level. That being you're risking $3 to make 12. Whoa, let's try that again. 13. So you got about a 6-to-1 risk-reward ratio on that. So I would really, keep a close eye on that. The other one that looks kind of interesting here, hold on here, I'll get up here and take a look at it here, was the euro. We had a really nice trade set up for today in the euro, a beautiful 3 drive to a bottom pattern. I mean, my goodness, if we take it and look at this on a longer term time frame, it's probably went right at the 382. I haven't even checked it yet, but this is the ABCD that we were looking for. It was below the 382. I can tell that from this level right here. It went to the 50% level, but there was the easy buy right there, and that's had a tremendous move, and we still think we got more to go to the upside. The other one that we're really watching very, very closely here, that's just following like a Swiss watch, and that is this. This is the Japanese yen. There's where we were yesterday. We were talking about that. There's your ABCD pattern right there at 184. And as you can see here, in just one day, we went up to the exact 382 off of that level right here. Now, people are saying to me, why did I pick this level as opposed to that level? And that is because this was a pretty good rally and it was an ABCD. The other one, if you'd done it, let's just do it together just to show you how far off it was. But you had two things going for you. You had symmetry right out of Andrew Lowe's book, symmetry move. It's already moved, folks, down $1,400 today from the sale level that's right up in here. So now I'm just going to go and draw it from this level here down to the low, and you'll see that it misses the 382, folks, by 12 pips. That's all it misses off of that high right here, and that's what's happening right now. So this is making it look pretty interesting here about the Japanese yen of how it's acting. So that was one that we were watching very, very closely. Now together, since we've only got 20 minutes to go here before we get to our good friend Stan Harley, we want to take a look at the bond market. I haven't looked at it this morning because I've had some things that I had to get done technically to try to get this technical problem fixed, which I'm not able to fix yet, but hopefully it's going to be. So here is the Treasury bond chart. It's had a pretty, oh no, don't do this to me, please. Oh God, I tell you, all my frustrations in this business, folks, come from the fact that I have I don't know what that means. I really don't. Let me try something here. Window, child, vertical. Maybe it's in the list here somewhere. Oh, I can't find it. I can't find it. Nope. All right. Well, I can't even bring the bonds up. I bet you I can bring the notes up. Let's try that. The notes will be good enough, I think. All right. QRST. They're right above it. And we'll get the notes here. Just open it right here. Oh, don't know what's causing that. I don't know. Sorry, folks. All right, here's one that we haven't looked at in a while. It's back like 50 years, but this was coffee. The other day we were talking about watch coffee making a 382. Well, this morning you can see it was down yesterday. Okay, it stopped here. It opened higher, went back and tested the market one more time, and then had a nice run. And all it did, I don't trade this. I'm just showing you what it's doing. It went right to a 382 right here, and it looked like it was going to go here. Now it's starting to move over. That's all I'm doing. All I was doing when I was watching coffee was looking at that hourly chart, because when that thing went up here, went below there, that was when that's where the real problem lies. And now, if you trade coffee, you still got a chance, because watch this. This is over the last couple of days. Now, there's your AB leg right here. There's your CD leg right here. Now, what we need to do is to measure to see if the AB leg was equal to the CD leg, and that's what we're going to do right now. I can't believe I'm doing this in coffee. There it is, right on the money. So we'll move on to something else, because I'm not much in coffee. Let's take a look here at the I've already covered the Russell, what it's doing and stuff like that. So let's get over here and take a look at this here. With our chairman of the board of the Federal Reserve today, we'll be speaking today, and we will be watching what he has to say. But I'm certainly it's going to be bullish, because they have a pretty good idea what they're going to do ahead of time. I wish I could get a bonder. I had them up there a little while ago, but here's the gold. Yesterday, we were talking about this particular ABCD pattern that we had. That was not it. It was this one right here. This was the ABCD pattern we were following right here. We had another one today, just absolutely. And this was a double header. Missed this one too. Boy, oh boy. This is a hard knock today when you don't have technical stuff working in your favor, but that's all part of the game when you're not a technical aficionado. Okay, there's a relationship here. There's your 61, 61, 61. Hit it several times, and then finally it went below it. But look how it did it, folks. There's your ABCD pattern right here. AB equals CD, right on the money. And what do you have right in front of it? Another AB equals CD, right on the money. And from that level here to that level there is a paltry $2,600. Now, looking at this on a longer time frame, we're going to go to the hourly here, and you're going to see there's where we are in the longer time frame. So what we've done now is we've made a big Gartley here off of that secondary high we had up here at 26.92. So it doesn't take much for this thing to get moving. So let's remind ourselves that this is still got a chance, because you got to draw it off of here, and now this is not a good pattern, folks, because you've got this in between, so you can't use that. You have to use this as your spot, and that means it looks like it wants to go higher after that run. So there's your ABCD. That is going to take us back to challenge these old highs back in here. And there's a second reason to think that it might do that, just looking at today's action over the last couple hours. We'll just go down to a 13-minute, and you'll see that all you've had right here, there's what we were looking at, and then what you had right here was a perfect 382 retracement right on the money, and it'll rally $10. I'm going to send this to myself, because I like to use that to remind myself that, by gosh, this doesn't work all the time, but it works some of the time. And that's the real beauty of what we're doing here with the pattern recognition. Okay, let me check that. We'll be right back, folks. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the Treasury bond move that we've been talking about. We gapped above this line, which is an 89W out of the Wyckoff course. Richard Wyckoff was a friend of H.M. Gartley back in the 30s. This is the action we've had today, and as I see this, it just makes me even more angry, the fact that I had no data coming in. But if you go from your low to your high, you want to watch for the 382 retracement to come in. And how close did it come to the exact tick? Now, what we're going to do now is we're going to go down to the hourly and probably find a really nice AB. Well, there it is right there. Just staring you in the face. Wow, look at that, folks. $1,500 without even batting an eye. There was the original buy right here. We sold it up in here, and I always say buy the first 382 retracement in a bull market, and there it is right there. We had one right here, you see, that just missed by a few ticks. This one was spot on from your low that you had right here. There it is right there. Actually went below it by 3 ticks, and now it's had a move. That's telling you this thing is getting ready to go higher. That means what he's going to say means it's going to be bullish to the bonds, bullish to the notes, and most probably bullish to the stock market. That's what I think is going to be happening. But again, I'm only right part of the time, and that's not very often that I say that, but like I say, I'm often wrong, but never in doubt. But that is one flat-out bullish pattern. There's no question about it. That's why we're seeing these moves in the currencies. You're seeing a bullish move in the euro, a bullish move in the dollar, yen versus the dollar. So that's the kind of thing and even in the gold, all of it's sort of starting to fit together. All right. Now let's take a look at a couple of things that people have asked about that I haven't covered yet. Please don't ask me about coffee anymore, folks, because I don't trade that. I don't even want to trade it, just like cocoa. Just a personal experience of that. So let's take a look here at the British pound, because we made some really good moves here in the British pound, and we're probably going to have some more coming up here. So we're going to take a look here. Now, this is the British pound on the long-term daily chart. We had that bottom in there. You can see that. We covered the short right in here. The market is going up. I said 3 days ago. Let's get this up here. There it was. I said it's starting to show signs of life. Well, it's more than 3. It was a week ago. You see, we have higher tops, okay, and higher bottoms. That's an uptrend. So today's action, as you can see, looking at this on a short-term basis here, we've had some nice ABCDs in between, but we're forming one right now. This is what we're looking at from the high of November 29th. So let's look at that together right now, because it's forming. As you see, there's your AB leg right here. Okay, now this one is higher than this one, so you should take that one. And you come down to this level right here, and that says 1427. It's exactly where it's trading right now. And if you looked at it over the last all days trading today, oh, there's another 382. If you like 382s, there's your move up. There's your 382 pullback. Actually, it comes in at 0.442, right there, 0.42, which is basically 382. And there's your target on that one. So this should be a place where we're probably going to get some type of a nice correction in the pound. But it's had a very good move today, folks. Almost 100 pips in a pound, and that's a pretty big move for the British pound. And remember, it's really low risk to trade that because it doesn't have too much. Now we've already looked at the Japanese yen, but let's look at it just a little bit more in depth. Okay, let's get up here, and we will. It's at the very last, so. Bring it up. This is a really fun one to trade, folks. This one gets you lots of action, and it just gives you some really good stuff to look at here to watch. Now, there's what we've had so far. The pullback yesterday was a little below the 382, but the move today was the one yesterday that we talked about, where it was making that beautiful. This was just an absolute textbook 3-drive pattern. There's drive 1. There's drive 2, there's drive 3, there's your ABCD. See the nice ratios it comes in right here. And then it's had a really nice move, and that's where it went almost to the exact 382 of the whole move down from, way back here on the 19th of November. So this is it's now in a downtrend, but it could be turning now. So what you want to be watching, remember, this is an hourly chart, so we're looking at 24 hours action right in here. So the first thing you want to do, you can already see that it has already dropped below the 382. In fact, just by a little bit, but there's no ABCD here like you have here. So this is a harder one to gauge. Now, because the market hit that 382 and coming down like that, you assume that maybe this is a whole new leg down, but you don't know that. Like what I'm looking at in the stock market, every single thing I see, it says, oh my gosh, if I buy stocks here, I might as well throw the stuff in the street. And it's probably, you could go out and pick it up. But this is one of the strongest sell signals I have seen in all the years that I've been looking at this stuff. And believe me, I'm wrong sometimes, that I always say, and this is the day of it. If it's probably going to be stronger today, just looking at the bonds and the currencies and him speaking, it probably won't make a high until the 5th. And that would mean we had 2nd, 3rd, 4th, 5th. That'd be 4 days. I've never seen a pattern like this that would go past 4 days. So it might go tomorrow, but be real careful if you're buying stuff in here, folks, because there's so many divergences out there between the Russell, the Dow Jones, S&P and NASDAQ look really great. The rest of them don't look that great. So that's my 2 cents worth, and we'll see what's happened, okay? And that's what we're watching. I will say what I did today, I was going to do, and I brought this up here, I was going to issue a sell signal here in the this was my chart for today. This is the daily NASDAQ. And as you can see here, I was wanting to sell the NASDAQ at 2148. Right up in here. 2154 was a number. It's been as high as 22. It's went 40 pips above it. You have to risk a whole 100 pips here, folks, because this is a wild one. It probably gets stopped out, but this is not official because I couldn't get it in, and I couldn't get it out to send it to anybody. So that was a blessing in disguise so far. We'll see. Anyway, those are the ones that we're paying attention to now. I know everybody's asking about Tesla and Apple, and I will get those up here right now, and we'll take a quick look at it. First, we'll look at Tesla because it's right here on the front burner. It's got to be strong. Well, it's doing nothing today inside. Holy cow, hard to believe. Now, Apple's got to be really strong. So let's see how Apple's doing. We'll get Mr. Appel here, who's down by the well, and there he is. Bring it up, and we'll see here. And Apple gapped up again. It made that target, folks. There's the one we were looking for. Do you remember that? Just a couple days ago? Son of a gun, it sure did. There it is right there. It gapped up to this level right here today. Wow, very strange, huh? Maybe this stuff does work part of the time. Some of the time, but not all the time. If we look at the lows to highs on that, you'll see market went up for 19 trading days. And I can tell you this is not quite 19 trading days, but we're going to move it over just to check and see. That won't happen until way out here till the 10th or 11th or 12th. But time is really elusive, folks. This big gap up is the one that you want to look at. But look at it measures to 244.29, and the high today was, it misses it by a lot. It's 244.11. It misses by 18 cents. And it's already $1.50 below it. Shut the front door and raise the rent. Maybe that's the high in Apple. Who knows? Guess what? We've got to pay some bills, and we've got our main man coming up, none other than Stan Harley. So stay with us, boys and girls.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direction's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're back, and evidently Stan is tied up today, so he won't be able to join us today. So what we're going to do now is we're going to check the Treasury notes, just to check and see, because notes are the largest of all the commodities that we trade, and they always have some good followers. So we're going to take a quick look here and see if the Treasury notes did the same thing that the Treasury bonds did, and that is to pull down to a 382 retracement. So we'll move over to an hourly chart. And then you'll see there's where we are. There's the move. Boy, it looks like it's going to be real close, but we're going to try it out here. I think it made it. By golly, let's just take a look here. From this low here to this high here. Nope. See, the Treasury notes missed the low, but the bonds did. See, the bonds hit it pretty nice. Now, there's a small, and believe me, I don't never try, well, almost never. This is the notes yesterday and today's action. You can see we do have an ABCD pattern right here. See, when you trade the notes, you only get half of the volatility that you get with the bonds. Like this moves. This is pretty big. With 750, the bonds have moved 1,500. That's a big difference. That's why there's more players in the bonds for speculation than they are with the notes. This is where you get your credit cards and all the other stuff that's going on. All right, we'll move that out of the way here, and then we want to take a look at one other currency that people have asked about, and that is the Australian dollar. We'll take a look at it. We're coming down to what I think is going to be a pretty good spot to take a look at the Canadian dollar from the long side. Here's where we are. We're going to move it over here, and you can see we're testing let's get all this out here. And hopefully, did I have anything going here right now? Stan is on the line now. He's in the house. Mr. Harley. Sorry about that, Chief. I'm a little upset with the technical structure of my brain because I had a lot of technical problems. Stan, please tell us what you got. You got the whole show. Please go ahead.
Hello, Larry. Can you hear me from
You're coming in good.
Virginia?
Yep.
Excellent.
You're in the house. Right ahead.
Yeah, I was talking to you and you were unable to hear me. I couldn't understand why.
Yeah, well, that happens to me all the time.
Yeah, I had an initial problem with my camera on my other computer, so I had to switch to a laptop. So a little less clarity today, but
well, you look just like Tom Cruise. By golly, you're doing good. So,
well, thank you. I'll show you a few charts today that I think the viewers might find very informative here. Let's jump right into it with the stock market. It's been my theme that we are in the process of making a major top in the stock market. Some of this is reviewed for some prior talks we've had, but I think it's important nonetheless. Here is a yearly chart of the stock market going back to 1602. And some might say, well, the stock market wasn't trading in 1602. Well, yes, it was. It was trading in Amsterdam, the Netherlands, and then later it was traded in London in the United Kingdom, and then later here in New York in the USA. And I have this data from the Foundation for the Study of Cycles. It's a synthesized S&P 500, which has compiled data from Amsterdam, from London, and New York. And so what we have is a synthesis of the S&P 500. I also have it for the Dow. Well, in looking at the data, one can see that the market has made major tops in 1649, 1720, 1835, 1929, and a pending top, which I think is occurring right now. When I run this data through the Foundation for the Study of Cycles Analyzer program, it computes a dominant cycle of 92 years. And that cycle is due right about now as we speak. Let's take a look at the monthly data.
Okay.
When I input the monthly data for the Dow Jones Industrials into the cycle scanner, it has an AI utility that determines that the best cycle in that data series in the monthly data is 41 months. You can see it's ranked up here, number one. That's the number one cycle. And notice how well this picks out the highs and lows in the stock market. This cycle has been quite dominant for many, many years. Indeed, Edward R. Dewey, back in the 1940s, found this cycle and wrote about it in his book. And it's still prevalent today. And the analysis would suggest we're at a peak right now. When I look at the weekly data, Larry, here's something that I haven't shared with you before, but very, very interesting nonetheless. When I look at the Fibonacci ratios that splice the major highs and lows going back to the March 2020 low, I find that these major highs line up with the Fibonacci ratios pristinely, and it's due ideally right in the present time frame.
Wow, it looks pretty good, Stan. Why don't I want to go down?
Well, be patient. Be patient.
I am.
Here is the daily data, and one can see we have a trend change cycle of exactly 89 trading days. Of course, 89 is a Fibonacci number. And notice the pivotal turns in the stock market. Could be a high, could be a low. But we had a low here, we had a low here, a high here. And you can see there's some degree of variability. But when I plug all the data into a spreadsheet and do what's called a regression analysis, which is a mathematical tool for finding the best fit to a data series, it computes the cycles length at 89 trading days, and it's due in the present time frame.
Okay.
Now, I'm going to go out on a limb here, Larry. I'm going to say right here on the air, I think today is the top.
Sarah, bring me some medication. Stan says that the top is going to be in the stock market today. I'm just joking. She brought a saw over for that limb you're on. She just handed me the little Tandy saw that I keep by my desk all the time because I'm on that limb all the time, and I keep sawing and sawing. Hey, Stan, I love it. I love it. You're taking a shot at it because I did too. So we'll see what happens.
Well, yeah, you can take me out and shoot me. That's fine. But here's another daily cycle that I'm looking at, and the Fibonacci ratios. And oh my gosh, when I start the analysis from the peak that occurred back on 27 July 2023, and I go forward in time, Fibonacci ratios, within a very, very small variance, the square root of which is the standard deviation, it lines up with today, with a very, very small standard deviation, suggesting making the very, very compelling case that right here, right now, if not today, I think within a day or two, I think we're there. I think we're just so doggone close to the top, I can smell it.
Okay, we'll be right back with Stan Harley, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, Stan, and I've just been informed by TFNN, if you're wrong today, we want to thank you for all the years you've been in service, but this will be the end of your career. Stan, you know, the years that I was at Drexel, and I was there 6 years, about twice a year, I would send a resignation letter to the Drexel people saying, that's it, I'm not doing this anymore. And they saved those letters for me and put them in a file. And I didn't know this, but when I left, they gave me the letters. I've since lost them, but I quit this business, I think, 12 times during that 6 years. So I know what you're going through, my friend. So please continue.
Well, it's a challenging biz we're in, you and I.
And change it in a minute, yeah.
it does. And so what we do is we do our very, very best in terms of analysis, and then we put capital at risk predicated on that analysis. But at the same time, we have to manage that risk. Yeah. And this business of analyzing and trading, I like to remind people, it's not about perfection. It's about doing all those things, but it's not about being perfection. Think about being perfect. Think about baseball players. The very best among the baseball players get out 70% of the time.
That's right.
Put another way, they're 300 hitters, right? Which means 70% of the time they get out. They only get on base 30% of the time. Well, would you hire somebody that is only right 30% of the time? Well, in the baseball world, the answer is yes. And so this business we're in is somewhat akin to baseball. Let's take a look at a different market. Let's look at gold.
Okay.
I think the metals have either peaked or I'll say they're topping. Like with the stock market, there's a lot of cycles and numbers that come together in the present time frame that to me make the very compelling case that the top is either in the rearview mirror or it's imminent. This is a chart going back to 2010, and what I've noted here is our good old friend Edward Lucas and the number series that he came up with for us has defined all of the major peaks. as one can see. If I take the Lucas number 29, multiply by 2, that's 58, and that defined the peak between 2011 and 2016. These are monthly counts, by the way. And I won't go through all of them, but one can see on the screen how the Lucas series, either the raw number itself or its 2 times multiple, has aligned with all of the major highs. And assuming the pattern continues, assuming that it does, it may not, but assuming that it does, it's highly suggestive of a top right in the present time frame for the precious metals market. And I would, as an aside, I would note the structure. We've been going virtually pure vertical the last few months, and that's how tops in the metals market are typically made. It makes spike tops and rounded bottoms, generally speaking, and we are certainly rallying into a spike top.
Okay, looks pretty good to me. It's acting that way anyway. That's pretty good.
Let's take a look at Bitcoin, since we still have a little bit of time.
Oh yeah, or do we ever? Please.
Here is a log chart of Bitcoin. If you try to take a look at it on an arithmetic chart, it's impossible because it's risen so much. But this is Bitcoin all the way back to July 17th, 2010, which is when Bitcoin first started trading. And again, Lucas numbers. Note how all the peaks, the primary peaks in Bitcoin, can be defined by the Lucas number series. These are also monthly counts. And I've noted the Lucas numbers across the top. And every single peak is within 1 or 2 months of being exactly a Lucas number. And assuming the pattern continues, the number, since we're past the number 29 already in terms of months, the next number in the series is 47, and that points out to later next year for a potential peak in Bitcoin. Let's take a look at something else. Instead of the x-axis, let's look at the y-axis, and notice this. Notice how each of the highs that I have flagged with those purple vertical lines, each one is risen to a level in the vicinity of the base power of 10. So, for example, the high we had back in 2011, notice how it got just above 10 and then it pulled back. The next high point that occurred 29 months later rose to just above 1,000, a base power of 10 number, and then it pulled back. The next peak in Bitcoin, which occurred a little over 47 Lucas months later, saw Bitcoin top out just over 10,000. Do we see a pattern here? Well, sure we do. Each time Bitcoin has made an important cyclical top, it has risen to a base power of 10 with a modicum amount of overthrow, and then that has served as terminal resistance, and then it has pulled back. So where is the next base power of 10 level? Well, we're almost there now, 100,000. We didn't reach it back in November of last year. So that was, November of 2021. So that was not a significant high. The significant high is yet to come. And we're just shy of 100,000. I think we dance around in this area for a period of months, and we get up above 100,000, just like we got above 10, like we got above 1,000, like we got a little bit above 10,000. We'll get somewhere north of 100,000, but basically 100,000-ish, if you take a wide felt tip pen and draw it across there, I think will be resistance. So if I were a long holder of Bitcoin right now, I'd be keeping an eye on the exit. I'd also be mindful of the top coming later next year, but price is probably not going to be significantly higher than 100,000 in my judgment, assuming this pattern continues.
Well, because it went from like 6 cents or a penny to 100,000, would that be considered a very strong bull trend, Stan?
Well, it would.
100,000 looks like the South Sea Island bubble.
Yeah, it's a base power of 10 number, Larry, and each one has seen a modest level of overthrow beyond that number. So I wouldn't expect 100,000.0 to be resistance. We'll get something north of this level before we finally top out. I can't say at this early juncture what that level will be, but something north of 100,000, and then it could get to be 1.1 or 1.2. Sure, it could, but I'm not going to put a number. I'm not going to be that definitive now at this early juncture. But what I am saying is a base power of 10, which is where we just about are right now, will likely prove to be terminal resistance in this current advance.
Stan, thanks for joining us, my friend. We'll have you on again soon. We really appreciate it. I'm sorry about yesterday. I just dropped the ball. Sorry, buddy.
No problem. Understood.
Stan Harley, folks, the Harley Stock Market Letter. Top-notch guy who's saying the high might be today. And we'll see if it is. We'll be right back, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
I am confident that I will have the same kind of relationship with him once he's confirmed as I've had with other Treasury secretaries.
Okay, let me ask you a slightly different question that's in the same category, but actually very different, about just influence from the White House, because I think the public, it would help people to understand it. So before Paul Volcker passed away, I went to go visit him in his apartment on the Upper East Side. This is back in 2018. I was writing a story about him. And he had just written a book, and he had talked about and told me a story about how President Ronald Reagan and his chief of staff back then, James Baker, had asked him to come to the Oval Office. This is in 1984. And he says, quote, "Reagan didn't say a word. Instead, Baker delivered a message. The president is ordering you not to raise interest rates before the election." Now, Volcker wasn't planning to raise interest rates, and he said that he was stunned by all of this. And then he went on to say that he later surmised that the library location